Hello everyone, how's it going? In this video, we will talk about Mullen, trading under the ticker symbol MULN. Mullen has been a very interesting company to trade recently, with high volatilities and also many projects that may fuel future speculations. At the same time, it's a company that the market tends to not trust too much with the capital, especially when it comes to long-term investment. So, in today's video, we will go through the latest fundamentals, the price actions, and my analysis, as well as recommendation to hopefully see what is the best course of action to carry out regarding Mullen. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description, as every help is greatly appreciated. So, Mullen has been having a very challenging few weeks in the recent past, with the price going from almost 50 cents down to like 21 cents at the moment, losing more than 70% of its value in the past 6 months. So the current price action is likely caused by the company's own fundamentals and also the lack of trust in like Mullen and its CEO. But I also believe that the overall market is not really having a good time during this same period of time. So Mullen, at the end of the day, is a small company that, at least on paper, and of course I am assuming that Lucid is a company that still wants to do well, that still wants to be part of this whole EV revolution. Okay, so if that is still the case, and if they're not just a hustler trying to get people's money, then they would still require large quantities of cheap capital to pump in its operations. Since the yield of capital is currently very high, I don't see many people wanting to put their money into like risky areas, right? Especially since the EV bubble has bursted a few years ago. So, in terms of macroeconomic news, there's not much going on. The company's own news, sometimes they may help Mullen to get better, but more often than not, they either don't have any positive news, they either don't have any like positive effect, or they have massive negative effects. So this is why I would say that Mullen's overall reputation remains very fragile. And this is definitely something that we have to be careful about and to consider if we want to buy Mullen shares. This is a company that people don't necessarily treat as an investment, but more as a speculation. And speaking of, when capital can become cheap again, it's going to be a few years from now. So can Mullen wait till then? Like, if capital can be pumped in now, of course, the company can survive, okay? But what if it's going to happen 2 years from now? Does it look like a company that can survive 24 months without any significant cash inflow or massive bullish news? It's really hard to say. Now, with that being said, we should also remember that Mullen, even with the lack of trust, the economic crisis, the inflation, and the attempt of the Fed to try to get back to like a deflationary period of time or a very low inflation, I would say that, still there are opportunities that exist for Mullen simply because the market doesn't have to be completely rational. People can sometimes speculate on ups and downs, on the swings of a position, and this is why they would still buy and sell a position like Mullen, especially if they know that either way there's enough people YOLOing the shares of Mullen around, and if they just caught like the right end of the trade, then they stand to make handsome amount of money percentage wise. Because if you think about it, ever since the beginning of 2022, at one point the stock has reached like 21 cents, and then it bounced back to like 40 cents. This is 100% increase, right? And this is a natural attraction of penny stocks. A lot of people believe that penny stocks are volatile, therefore, as long as you're lucky or as long as you're fast, or the way they put it, as long as you're a psychic, sort of, you stand to make a lot of money. Now, I personally think that, we got to be careful about it. It's volatile for a reason, and we're not always at the nice end of it. But still, it doesn't stop people from jumping in, constantly, wave after wave after wave. And some people have made a lot of money with penny stocks. I'm not gonna lie. I made more than 100% of profit margin with Mullen, with one of my previous position that has already been closed. So this is why I would say that this is definitely something to consider. Everyone knows that Mullen is not the best investment ever. Most people, the vast majority of people, don't plan to invest in Mullen. But they might be open to the idea of trading Mullen, of course. Mullen is a publicly traded company operating in the EV sector, and it is listed on the Nasdaq Stock Exchange. The company designs, manufactures, and sells a range of electric vehicles, including car, buses, and trucks. One of the key factors setting Mullen apart from the EV sector is the focus on developing long-range electric vehicles. M115 is a long-range electric truck that the company is trying to develop and eventually to manufacture. It has a significantly longer range than most other vehicles currently on the market, making it an attraction option for people who would like to invest eventually in this massive potential success. Another thing is that they are investing in developing heavy-duty electric vehicles, such as buses and trucks, designed to handle heavy loads and perform demanding work. This is a unique offering in the EV market, where most other companies are focused on developing cars and light-duty vehicles. In terms of financial performance, however, the company has been having a hard time generating income and consequently digging itself a large financial hole that they have to fill every time with further dilution. In terms of the long-term price action trends, despite the recent upward momentums such as IGO distributions, the company has been having a mostly bearish trend over the past 5 years, first trading between $5 to $10, peaking at $15, before finally falling back to below $1. What this suggests is that Mullen has been hard hit by not only the market downfall, but also its own fundamental weaknesses. This assessment recently begun to change, but I would say that it hasn't reached a convincing turning point, and that to a point, it still explains why Mullen is a stock I would recommend to trade instead of investing in. Regardless of the recent distribution contract or the short squeeze potentials, the short interest surrounding Mullen remains real, and that the interest surrounding Mullen, period, remains the expectation to scalp a quick gain. With that being said, I also want to add that things can always change within this sector. So if today I say that Mullen shouldn't be a stock that you invest in, maybe 6 months from now things could be different. The online communities have been initially skeptical towards Mullen. Nowadays, it's mostly something that follows the trend. So for example, if things are looking good, they will find the positive aspects of Mullen and to say that, you know what, this is why it's been going well. Or if things are plummeting, they're going to say, well, you know what, like such and such reason is the reason why they're doing poorly. And you will also have a small group of fans who will always find reasons for optimism, regardless of how desperate sometimes the situation may be. As far as their online footprint is concerned overall, the biggest factor to consider is whether the price action gives people enough motivation to have a position in Mullen. The other factors have sometimes served as a pretext to buy its shares, but more often than not, the price action has already sent that price signal to the market to react positively. On top of that, the macroeconomic trends affecting the sector have also been putting pressure on the stock price. including the increase of interest rates, the capital flight from growth stocks to other sectors, the conflicts around the world, the supply chain issues, and the expectation of a demand that will be softer than usual. And this is going to continue over the next couple of years due to a recession. Another factor to look at is how the flagship company in the sector, so in this case Tesla, has been doing. The EV sector being a relatively new industry, a lot of it is still in development, including the investor's mentality. People often determine whether they want to buy EV stocks based on how Tesla has been doing recently. The idea here is to profit from a sector-wide gravy train conducted by Tesla, pulling all the other ones behind it. We have seen on multiple occasions how the share price of a company like NIO, Lucid, Xpeng, or Mullen follows similar trends compared to Tesla. Of course, Mullen doesn't always follow the trend, but it has played in its favor, but also the other way around. So we have to be mindful of those factors because they will definitely paint the picture of the surrounding environment in a specific direction. With that being said, let's also take a look at Mullen's financials, which might give us some hints about the decisions that the company has to take in the upcoming periods. One thing to note about its financials, it's not generating income for the moment, but we know for a fact that they are currently distributing iGos in Europe, so this will eventually change with the upcoming reports. The other issue is the cash reserve. So I personally believe that Mullen is a company that has to rely on continued capital injection by selling its equity to continue its going concern. This is concerning to say the least, but in my opinion, this is going to continue for the foreseeable future. In other words, the retail interest has to be significantly larger than the dilution that will be announced in order for us to make money. So like I said before, the fundamentals don't necessarily help Mullen. They are currently a dead weight that will eventually push the price down. But if we rely on qualitative factors, things that are beyond the immediate reality, but if we project the company to a brighter future, then it's possible that a large number of people might pile in and buy the stock up. This is the kind of behavior we're expecting to see if we decide to invest or to trade Mullen. Because in terms of trading, Mullen actually has a very good shareholder structure. So they have a mostly retail shareholder base. And what this means is that they will be far more volatile than typical stocks. Of course, I know that BlackRock recently increased their holdings, but this is not doing it for me. That alone doesn't mean much, personally. So the lack of significant institutional participation means that I personally don't want to put money in for the long term. The key behavioral difference between institutional and retail shareholders is their investment horizon. Institutional buyers tend to stay for longer term, with years or decades as the measurement, whereas people who are in as retail, they tend to get in and out very quickly. Sometimes after a few days or weeks, they might already be gone. So the short squeeze seems to be the massive catalyst that we are dealing with at the moment, and this is something that can present excellent opportunities for us. So currently, there is a significant position, around 40 million shares, that are being shorted against Mullen. The majority of them are traded outside of public exchanges, so therefore by institutionals. The potential of the short squeeze in this case is significant. The short squeeze is a phenomenon that is observed when traders decide collectively to buy up the price of a stock, forcing those who are holding the shares to redeem them. The reason why they may have to do this is because they want to avoid further losses. So the redemption would act as a further wave of purchases, pushing the stock even higher. So it's important to note that regardless of how many stars are aligned on paper, the short squeeze itself may never happen, just because there are a number of factors outside of anyone's control that will determine if the short squeeze is something that will occur. My recommendation is, for the most part, from a psychological point of view. Psychologically, Mullen is currently priced at around 20 cents. This is extremely low for Mullen from a psychological point of view. De facto, does Mullen even, deserve to have 20 cents per share? I don't know. I would say that Mullen needs to prove a lot of things to the investors in order to showcase its relevance, but that's going to be another debate. Right now, my point is, it's at 20 cents. It's very cheap for Mullen itself. Last time it tried to dip below 20, it didn't succeed. So I think that unless we dip below 20 cents, then it might just be Armageddon, right? But until then, as long as Mullen can stay at that level, I would personally consider the whole stock to be something that can be traded for quick, swings, profits. So, for example, if it reaches, 20 cents, 21 cents, it goes back to 26. Well, that's a hefty percentage-wise. That's a hefty profit margin. So that's what we mean. And I think that this kind of stuff is bound to happen at different stages. At 20 cents, I think that there will be at least a lot of support trying to stop the stock from going further down. It doesn't mean that they're going to succeed, but they certainly will try. So 20 is a beginning. Afterwards, it might be, 15 cents, 10 cents, and whatever, but we're not there yet. So right now, I would recommend you to start buying Mullen. Obviously, remember that this is a risky position. This is a position that it's better for you to not hold over, let's say, a month, right? And it's also a position that the profit target should be at least 30 to 50% to, how can I put it, to be consistent with the risk profile that this company has. And the maximum exposure shouldn't go beyond 1% at all time.